You might get a check in the mail from the state of New Jersey this year in May, and you probably don't even know it. Found money is awesome, but today I'm going to walk you through New Jersey's new Anchor tax program, what it is, who qualifies, who doesn't, and how much you can expect in the mail. Hi, I'm DJ Tenhove, and I've been a realtor since 2008. My team, the Tenhove Realty Group, and I have helped thousands of people just like you buy their first home, upgrade to their dream house, or downsize inside or outside of New Jersey to get closer to family, with hundreds of repeat clients and 5-star reviews to prove it. All right, brief disclaimer. Because we're talking about taxes today, I need to let you know that I'm not a CPA, a tax accountant, or a tax attorney. When it comes to taxes and accounting, make sure you consult with a licensed professional. All right, let's go. Back in October of 2022, the state of New Jersey passed new legislation called Anchor. Anchor is another fun government acronym, but it stands for Affordable New Jersey Communities for Homeowners and Renters. And for those of you who remember it, it basically replaces the old homestead rebate that we used to have in Jersey. The goal of the program is to provide property tax relief to New Jersey residents that either own or rent a primary residence here in the state. Right now we're shooting this video in April of 2023, and because the program looks backwards and has a lag, this year they're processing payments for people who resided in the state and qualified from 2019. Next year, they'll process payments for people for the year of 2020, and so on and so forth, for as long as the program continues. The deadline to file for your 2019 benefit ended on the last day of February 2023, which is obviously passed already. But it's important to understand the program, and in order to qualify and file for next year, make sure to set a reminder in your phone to file for your 2020 benefit before the end of February 2024. Well, that's if you even qualify. So do you? Okay, so let's see if you qualify. The eligibility criteria include 4 parameters: residency, occupancy, income, and taxes. First, we're going to tackle homeowners, because remember, renters could qualify too. All right, step 1. So as a homeowner, you had to be a New Jersey resident in 2019. I mean, that one's pretty self-explanatory. Second, you had to be the owner of a primary residence in New Jersey on October 1st, 2019. The third criteria is that the property taxes had to have been paid for that property in 2019. And the last criteria, that's probably the most important and most controversial, is that your gross income in 2019 had to be $250,000 or less. Before I get into a few situations where you still might not qualify, let's clarify a few outliers where you would, provided you meet all the rest of the criteria I already mentioned. Let's say you live in a condo or a co-op. Do you qualify? Yes, you should, provided you're responsible for the taxes and you paid your proportionate share of the taxes. You should qualify. What if you live in a continuing care retirement community? Do you qualify? Yes, again, as long as you're responsible for paying your proportionate share of the taxes, and you did, you should qualify. All right, let's switch over to renters now. But homeowners, stay with me, because after this, we'll go through the part you really care about, which is how much money to expect. For renters, the criteria is pretty similar. First, you had to be a New Jersey resident in 2019. But the income limit's a little tighter for renters. In 2019, your income had to be $150,000 or less. Next, your name had to be on the actual lease, and you had to be the person who actually paid the rent. It also requires that you occupied the residence that was your primary home on October 1st, 2019. And lastly, the property that you rented had to have been subject to local property taxes. These are all pretty straightforward, but let's clarify a couple outliers that you could still qualify as long as you meet the rest of the other criteria. What if you live in a mobile home? Well, whether you own it or rent it, mobile homes are considered rentals, so you should qualify. And if you rented a condo or a co-op, you should also be good. Before we get to the credit amount, we have to go through a few situations where, although you might meet the owner or renter criteria we already mentioned, you're still not eligible. For example, if your property was completely exempt from paying property taxes, which, for example, if you're a totally and permanently disabled war veteran, then you probably won't qualify and would be ineligible because, again, there weren't any taxes actually paid on the property. Let's say that you own a unit that's part of a pilot program, which stands for Payments in Lieu of Taxes. We commonly refer to these abatements. So, for example, maybe a unit in the Lofts at Pier Village in Long Branch, where we do a lot of business. Unfortunately, you won't qualify. For the purposes of the Anchor program, your pilot payments don't count as tax payments. But weirdly enough, renters who rented in a pilot unit do qualify. But renters, if you rented on campus or university housing, you won't qualify for this program. Same thing goes if you rented tax-exempt housing or housing owned by New Jersey, your municipality, your county, or the federal government. Also, if you rented property from a religious entity or a charitable entity, you won't qualify. Thanks for hanging in there with me. I know that was a lot, so let's talk about the money now. First, homeowners, your benefit cannot exceed the amount of tax actually paid. Remember this as I get to the next part. If your 2019 gross income was between $150,001 and $250,000, your tax benefit will be $1,000. If you made $150,000 or less, you get the full $1,500. But again, if for some reason the actual property tax that you paid was smaller than those amounts I just mentioned, you'll get back the lower of the two amounts. Renters, it's a whole lot easier for you. As long as you met the rest of the criteria we talked about, you get back $450. Now, if you share ownership of a property with someone other than your spouse, or let's say you live in a duplex and you own half the building, I'm sure you've got some additional questions. How those benefits are calculated and a whole bunch of other complex situations that we're not going to tackle here today are covered on the state's website that we'll make sure to link down below in the description. All right, so now you can be the smartest person at the barbecue this summer and tell all your family and friends what the Anchor program is and why they did or didn't actually get that check in May. If you already live here in New Jersey or are looking to move here, please make sure to hit that subscribe button to get alerted to the other educational videos that we drop, letting you know how to save money and build generational wealth through real estate here in the state of New Jersey. And as always, I'll see you on the next one.